bound to come out ahead in the long pull. If you don't like gold, use silver or diamonds or copper, but something. Any damn fool can run a printing press. Jim Cramer. A lot of people don't like Jim Cramer, but Jim Cramer came out this week and said gold is still a great long-term money-making theme. Every investor should own some gold. To invest in precious metals, the telephone number 1-866-623-2002. It's about protecting the purchasing power of your money, your dollars. And if they had not monkeyed around with the CME margins on futures contracts, the precious metals markets would still be running right now. Ben Davies was interviewed from Hind Capital, was interviewed on CNBC this week, and he said, really, the precious metal story, it's all about monetary policy. That's what people don't understand. It's about monetary policy, as Harold was saying. Quantitative easing, sovereign debt crisis. And don't forget, there's a physical market when it comes to precious metals, and there's a paper market. What we've seen is the paper market being pushed around. There aren't people lining up to sell physical metal. They're still lining up to buy. So all we have is people pushing around paper contracts. And John Embry from Sprout Asset Management has said what you need to focus on is not the dollar amount of your precious metals, but the amount of ounces that you own. And right now we're in a period where people are obviously a little fearful on the commodity side of things. Before, maybe they were getting a little too greedy and things have corrected. But we have been through this many, many times before. And I agree with Harold. The fundamentals have not changed one bit. And anyone can operate a printing press. We know that for sure. Jim Sinclair said, I don't believe we have seen a top in silver yet. A great quote from Warren Buffett. Look at market fluctuations as your friend rather than your enemy. Profit from folly rather than participate in it. And markets obviously will go up and down, but as Harold was saying, the trend is your friend, and the long-term trend based on monetary policy is in our favor. Coming up this week, I thought Goldcore had some very interesting comments. They said the massive disconnect between the COMEX spot and future prices and the physical market continues with Wall Street banks able to affect short-term sell-offs in the paper market despite the very strong supply-demand fundamentals in the physical bullion market. Also, they said, simplistic assertions that gold and silver are asset bubbles and that silver's bubble has burst continue. Those who have been wrongly calling gold and silver bubbles in recent years fail to realize that gold and silver are no ordinary assets. Indeed, many contend they are not assets at all, but rather they are money. The precious metals were demonetized in the second half of the 20th century as unbacked paper currencies, fiat money, became globally accepted. And this is a time now, as we've said on our show, where people are realizing they need to protect their assets and have hard assets and protect against being debased by governments. Also, Goldcore coming out and saying those diversifying into gold and silver bullion would be advised to continue to ignore those who simplistically call gold and silver bubbles. Many have been calling gold and silver bubbles since early 2008 when gold rose above $850 and silver rose above $20. Most failed to warn about the bubbles in the equity and property markets and therefore do not have a good track record regarding this matter. Their analysis continues to be selective and simplistic and can occasionally be biased. The fundamentals of supply and demand and the small and finite physical bullion markets being confronted with robust increased demand internationally, and particularly in China, India, and wider Asia, are ignored, as is ultra-loose monetary policies and currency debasement on a scale not seen in modern history. Rather than continually attempting to call the top of the gold and silver markets and thereby discouraging people from owning the physical insurance and financial insurance in gold and silver, it would be wiser to admit they cannot predict the future and that people should be diversified in order to protect against the extraordinary degree of macroeconomic, monetary, and geopolitical risk in the world today. And Harold, all those comments from Goldcore, I couldn't agree with more. We are in a time where it seems that here in the last little while, some forces, Wall Street, and other forces as well have decided that they don't like precious metals. And we've been dealing with that for 9 or 10 years. But they've been against them from $4 silver and $250 gold. And these are the same people that didn't warn us about subprime or the real estate market. They're the ones that created the disaster that has put the world in the position that we're in today, with subprime loans being packaged and sold around the world. And we're to suddenly believe these people when they tell us don't invest in precious metals. In fact, to me, that is one good reason to invest in precious metals. If they're telling us not to, then obviously there's nothing in it for them. They can't scam us because they can't print gold and silver and diamonds.
Well, you're 100% right, Randy. And again, I agree with you. And the fact is that they don't have any credibility. When you don't call the markets in the first place, when you made nothing but countless errors, because, again, they only deal on emotion, they didn't deal on logic, I found it almost impossible to believe that the powers that be did not see this coming, and we did. Again, 10 years ago, almost every situation that's hampering the U.S. economy and the world economies, we discussed 10 years ago. So why is it that we were capable of doing it, but the greatest economic minds in the world that work for Wall Street and the government just totally passed on it? So, again, I put a lot of credence into our work. I've been through this before. I've been through the run-up in metals back in 1979 and 80. I've been through the inflationary markets. I took very, very distinct notes. And, again, we were successful at this. Our clients are successful. I get phone calls every day from listeners to the show saying that they've been listening to the show for almost the amount of time that we've been on. Many bought silver at $4, $5, $6, under $10, and they're doing extremely well. Again, we've also been through the 8 or 9 corrections in this market, and every single time when these markets have made these pullbacks, and some of them have been extreme, this market has always come back. So again, the trend is your friend, and the best example I can give you of that is 2 situations. One, in 2008 with oil, when the powers that be, again, brought down the price of oil from $150 to $30, and now the oil market's back up to $100, $110, $120. So again, it took time for it to get there, but the supply and demand factors made the oil market go higher. Same situation in silver. They dropped silver from $20 to $9 in a 2-week period, very similar to the time that we've seen over the past 2 weeks that silver's pulled back, but then silver came back and made new highs and ultimately hit 50. So this is not something to be nervous about. This is not something that we've miscalculated, that the market is over and we shouldn't be in silver anymore. It's the furthest thing from the truth. The fact is all the fundamentals are there. And as far as I'm concerned, I can certainly sleep at night knowing that as long as the U.S. dollar is going to continue to fall, I want to be in the gold and silver and diamond market, and that's exactly what's happening.
And the secret is that they may say they want a strong dollar. The truth is the United States doesn't, because they want a weak dollar. To invest in precious metals, the telephone number 1-866-623-2002, the website www.pmc.com. We're going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May 13th, 2011. Our time is 9:04 Mountain, 11:04 Eastern. Our radio show runs on AM 640 in Toronto, Saturday morning at 8, 6:30 CHED in Edmonton, Sunday at 3 in the afternoon. If you ever miss a show, the shows are archived at HESradio.com. I know I like to go back and listen to them again. HESradio.com. All you need to do is hit the button and they will play for you. It's that simple. For those living in the Edmonton area, our radio show will be on at noon next week due to hockey. Of course, 6:30 CHED picking up the conference finals in hockey. Canucks and San Jose and Boston and Tampa, and one of those games will be on. We will be on at noon, so please keep that in mind. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002, the website www.pmc.com. And as I was mentioning earlier, this great quote from Bunker Hunt, it's in the diamond section of our newsletter this week. I encourage you to get the newsletter from Harold. You can connect with him at rarecoloreddiamonds.com. He'll be happy to send it out to you, or call him at 1-800-432-1022, and it bears repeating. just about anything you buy rather than paper is better. You're bound to come out ahead in the long pull. If you don't like gold, use silver or diamonds or copper, but something. Any damn fool can run a printing press. Also, Richard Russell, and I pulled this out from a past newsletter because I think it was just so important. He says, if I told you I was going to give you a large steel box for your kids, and that box would not to be opened in 50 years, would you rather I put $3 million in cash in that box or $3 million in diamonds and gold and silver? Which one would you choose? And Harold, I think I would definitely take the diamonds, the gold, and silver because the way they're treating paper currencies around the world, now is a time for hard assets like our featured diamond of the week. You can go to rarecoloreddiamonds.com and see the featured diamond of the week. It's in our newsletter. Very seldom does a match set of flawless yellow diamonds become available for sale. This match set is 5.5 carats each, radiant cut fancy yellow internally flawless diamonds. And these diamonds have many incredible features. The color is very strong, the radiant cut very popular, and they are flawless. This match set, if it was to go to auction, would sell for a fortune. And, Harold, we have 2 auctions next week, both in Geneva, Sotheby's and Christie's putting them on. And on Tuesday, they're going to be selling a big, fat, juicy pink diamond, 11 carats. And they're saying that it could go anywhere from $10 to $16 million. So we look forward to seeing those auction results next week out of Geneva. But now is a time for hard assets. Anyone can run a printing press. It's obviously very different when it comes to diamonds. They are finite and getting harder and harder to get as every day goes by.
You bet. And the fact is that the diamond market is on fire. And for that exact reason, anybody with any type of money, and you do not have to be a millionaire to invest in the rare colored diamond market, but they want protection. The fact is that, as we talked about earlier in the show, the U.S. dollar is possibly a doomed currency, as so is the possible euro. So the fact is, with countries going bankrupt and currencies possibly not going to be here in the next couple of years, where do you put your money? Because the fact is that the currency markets obviously control almost everything worldwide. The forex markets are the heaviest traded markets in the world. But basically, with everything happening and the greed and stupidity that has happened over the last couple decades has led us to a time where, again, the confusion in the marketplace is very confusing for most people. We like to simplify things. The fact is that during these particular times, history tells you where to invest your money. Gold, silver, diamonds have been the area that most people have run to when these type of situations happen. And this time is no different. In fact, this time is going to be possibly one of the most exciting times we've ever been through. The thing is, if you're on the right side of the investment track, if you're investing in the right markets and the markets are going for you, these situations are not as stressful. But obviously, if you're losing money in other areas and you're uncertain of your investments in other areas, it could be very, very stressful. We know that the gold and silver markets will respond to inflation and a low U.S. dollar. So will the diamond market. In fact, back in 1979 and 80, when we had double-digit inflation, 20% interest rates, record gold and silver prices, and record oil prices, not only did gold and silver make record prices, but so did diamonds. Colored diamonds went up 500% in 1979 and 80. And now I'm starting to see very similar price moves that happened back then are now starting to happen again in the diamond market. So this is a very exciting opportunity for most of our clients because, again, diamonds are still one of the strongest investments you could ever make. In actual fact, with what's happening in the marketplaces and the way that we should be invested at this point, over the next 5 years, we should make a fortune of money in the gold, silver, and diamond markets. And the fact is that if we don't make the money in these markets, it means that you're just not in the right markets. So I anticipate the next 5 years are going to be explosive for us and our clients, and we just want to make certain that you're invested in the right areas. You want to own hard assets, physical assets that you could hold on you, because, again, we know what happens with the paper asset market. Now, the fact is that the diamond market is moving up substantially. There's only certain diamonds that we recommend, though. The most expensive diamonds and the rarest diamonds in the world are red diamonds, but they've already made gigantic moves. That is not necessarily a market that you necessarily want to run after. What you want to do is you want to invest the least amount of money at these points to buy diamonds that have the strongest potential for gigantic gains. And those are the yellow flawless diamond market